Welcome to our EUR CHF analysis report covering the period from September 15th to 20th, 2025. In this presentation, we'll examine the recent performance of the euro against the Swiss franc, analyze key market drivers, and provide both short-term and mid-term outlooks for this important currency pair. Let's dive into the details of what's been happening in the EUR/CHF market and what traders can expect in the coming weeks. Looking at the EUR/CHF market overview, we can see that the pair has been trading in a relatively tight range during the analyzed period. The current price sits at 0.93454 Swiss francs per euro, with a minimal daily change of just plus 0.05%. This stability is characteristic of the EUR/CHF pair, which typically exhibits lower volatility compared to other major currency pairs. The day's trading range has been narrow, between 0.93352 and 0.93561, reflecting the consolidation pattern we're currently seeing. Performance metrics show slight weakness over longer time frames, with a 1-month decline of 0.24% and a more substantial 6-month drop of 2.16%. This gradual downward drift suggests persistent but modest pressure on the euro against the Swiss franc. Several key news events have influenced the euro to Swiss franc pair during this period. First, we've seen significant US dollar weakness against major currencies, including both the euro and Swiss franc. This has been driven by expectations of a 25 basis point rate cut by the Federal Reserve and commentary from a newly appointed FOMC board member advocating for a lower USD. On the European side, ECB member Scicluna stated, "There is no preset plan for rate cuts in October or December," adopting a cautious approach that has provided some support for the euro. Economic data from the Eurozone has been mixed, with German and Eurozone ZEW economic sentiment surveys exceeding expectations, while industrial production slightly underperformed. Meanwhile, the Swiss franc has demonstrated significant strength, maintaining its status as a safe haven currency amid broader market uncertainty. This complex interplay of factors has created a balanced but tense environment for the euro to Swiss franc cross. From a technical perspective, the EUR/CHF pair is currently trading between key support and resistance levels. The immediate resistance sits at 0.9400, followed by 0.9450 and 0.9500, while support levels are found at 0.9330, 0.9300, and 0.9200.9250. Technical indicators are giving predominantly neutral signals. The moving averages show no clear directional bias, while the RSI at 48.5 is firmly in neutral territory. The MACD is slightly bearish, and Bollinger Bands are contracting, suggesting decreasing volatility and potentially setting up for a more decisive move in the near future. The overall technical picture aligns with the fundamental outlook, a market in equilibrium but with underlying tensions that could eventually lead to a breakout in either direction. Traders should watch these key levels closely for signs of the next significant move. In the short term, covering the next 1 to 2 weeks, we expect the EUR/CHF pair to trade within a range of 0.9300 to 0.9400. This projection is based on the current technical setup and the immediate fundamental factors affecting both currencies. Several key factors will influence this short-term range. First, the ongoing USD weakness is affecting both the euro and Swiss franc, though their relative strength against the dollar will determine the EUR/CHF cross rate. The pair's characteristic low volatility is likely to persist, keeping price movements contained. Additionally, the monetary policy stances of both the ECB and SNB will play crucial roles. Any shifts in rhetoric from either central bank could trigger movements within this range, though a breakout would likely require a significant policy surprise or external market shock. Looking at the midterm outlook over the next 1 to 3 months, we anticipate a wider trading range of 0.9200 to 0.9500 for the EUR/CHF pair. This broader range reflects the increased uncertainty over a longer time frame and the potential for policy divergence between the ECB and SNB. Key influencing factors for the midterm include the ECB's cautious stance on further rate cuts, which could provide ongoing support for the euro if maintained. Conversely, any actions by the SNB to manage Swiss franc strength could impact the upper boundary of our projected range. The long-term downtrend in USD/CHF could also influence EUR/CHF dynamics, as could broader Eurozone economic performance. Safe haven flows to the Swiss franc remain a persistent factor that could drive strength in the CHF during periods of market uncertainty or risk aversion. In conclusion, the EUR/CHF pair has been trading in a relatively tight range, with both currencies showing strength against the USD. Technical indicators suggest a neutral sentiment, with the pair maintaining its characteristic low volatility. The key drivers for this market include USD weakness benefiting both EUR and CHF, the ECB's cautious stance on rate cuts providing some support for the euro, and the Swiss franc's continued strength due to its safe haven status. Our trading outlook projects a short-term range of 0.9300 to 0.9400 and a mid-term range of 0.9200 to 0.9500. Traders should expect continued low volatility with potential for minor fluctuations based on relative euro and Swiss franc strength against the USD. Monitor ECB and SNB policy developments, as well as broader market risk sentiment for potential breakout signals. Before acting on any information in this presentation, please note this important disclaimer. This report is for informational purposes only and should not be considered as financial advice. The analysis and opinions expressed are based on publicly available information and are subject to change without notice. Trading foreign exchange on margin carries a high level of risk and may not be suitable for all investors. Before deciding to trade foreign exchange, you should carefully consider your investment objectives, level of experience, and risk appetite. Remember that you could potentially sustain a loss of some or all of your initial investment, and therefore, you should not invest money that you cannot afford to lose. Always conduct your own research and consider seeking advice from an independent financial advisor before making any investment decisions.